Welcome back to the Daily Crypto Roundup. Today, we need to talk about what is really happening in crypto, because if you only look at social media, you will either think Bitcoin is finished, XRP is dead, altcoins are going to zero, or the next massive bull run starts tomorrow morning. But as always, the truth sits somewhere in the middle, and this is exactly why we do this show every day. Bitcoin has slipped back below $63,000. The bounce from earlier this week has faded. Ethereum is still struggling around the $1,700 area. XRP is fighting to hold the $1.10 zone. Solana is still under pressure, and the wider altcoin market is not exactly giving people much confidence. But underneath the red candles, we have some very important stories developing today. We have the Fed killing off the rate cut trade, Bitcoin traders loading up on bearish bets all the way down toward $52,000. Strategy fears coming back into the market. XRP exchange reserves hitting a 7-year low. The Clarity Act still moving through Washington. Franklin Templeton looking at Bitcoin dividend ETFs. GoMining trying to take on Square with Bitcoin payments. And Microsoft warning about malware that can steal crypto wallets through infected USB drives. Before we get into today's stories, this episode is supported by Kraken. If you are looking for a trusted place to buy, sell, or trade crypto, Kraken is one of the biggest and longest-running names in the space. You can trade major coins like Bitcoin, Ethereum, XRP, Solana, Dogecoin, and more, with strong security features and a platform built for serious crypto users. There is a link in the description if you want to check them out and support the show at the same time. As always, this is not financial advice. Crypto is risky, prices can move quickly, and you should always do your own research before putting money into anything. So let's start with the prices. Bitcoin is sitting around $62,900. Ethereum is around $1,696. XRP is around $1.13. BNB is around $578. Solana is around $69. Dogecoin is around 8.3 cents. Cardano is around 16 cents. Tron is around 32 cents. Chainlink is around $7.88, and Avalanche is around $6.09. So the message from the market today is very simple. Bitcoin is not collapsing, but it is under pressure. Ethereum is weak. XRP is trying to defend a key level. Solana is still not getting the kind of strength people want to see. And the smaller altcoin market is still waiting for Bitcoin to give it permission to breathe. The biggest story today is Bitcoin dropping below $63,000 as risk assets sold off and the week's bounce faded. Earlier this week, the market had a bit of optimism after the US-Iran peace deal helped lift sentiment, but that optimism has not lasted. Bitcoin has now slipped back toward the lower end of its recent range, and the key area everybody is watching is around $59,000 to $60,000. If Bitcoin loses that zone properly, then the next move could become much uglier. That does not mean it has to happen, but it does mean this is not the time to be casual with leverage. And this is where the second story matters. Smart contract and DeFi coins are leading the losses as Bitcoin weakens for a fourth straight day. That is important because when Bitcoin goes down slightly and altcoins go down harder, it tells you risk appetite is still poor. Ethereum, XRP, Solana, DeFi names, and smart contract tokens are all under pressure, and the market is not behaving like it is ready for a broad altcoin season. This is one of the biggest mistakes people are making right now. They keep talking like every dip is automatically the start of the next altcoin explosion. But the market is telling us something different. It is saying capital is still cautious, and until Bitcoin stabilizes properly, altcoins are going to keep taking more damage. The reason this sell-off feels more serious is because it is not just about price. It is about leverage. Strategy fears are back in the market. Strategy's STRC preferred stock has been under pressure, and traders are starting to worry about what happens if the structure needs defending. The fear is that if Bitcoin stays weak for too long, companies, miners, and leveraged players could become forced sellers rather than buyers. That is the bit that makes people nervous. A normal correction is one thing, A correction where major holders, miners, and credit structures start getting squeezed is something else. That connects directly to another big story today. Bitcoin traders are loading up on bearish options bets all the way down toward $52,000. Traders have been buying put options at levels like $61,500, $60,000, $55,000, and even $52,000. Now that does not mean Bitcoin is definitely going to $52,000. Options traders hedge, speculate, protect portfolios, and sometimes overreact. But it does tell us where the fear is sitting. The market is not just protecting against a small dip. It is protecting against a deeper move lower. And then we have the macro side. The Fed has damaged crypto's rate cut trade. Rates were held steady, but the problem was the outlook. The dot plot shifted away from the kind of rate cuts crypto traders wanted and toward a more hawkish path. That matters because Bitcoin and crypto have been leaning heavily on the idea that easier money would arrive later this year. When that story weakens, risk assets have to reprice. Bitcoin can still win long-term, but in the short term, higher for longer rates make cash, bonds, and the dollar more attractive. That is not ideal for speculative assets. This is also why Bitcoin and gold are both having such a strange year. Bitcoin and gold are among the major assets struggling in 2026, and that is a massive point. People call Bitcoin digital gold, but right now, both Bitcoin and gold are being pressured by the same things: a stronger dollar, higher real yields, and investors rotating into other areas. That does not destroy the long-term store of value argument, but it does challenge the idea that Bitcoin automatically acts like a safe haven over short timeframes. Now let's move to XRP, because today's XRP story is actually more interesting than the price makes it look. XRP has lost the $1.15 support area and is now fighting around the $1.10 to $1.13 zone. That is the short-term bearish side. Whale selling has added pressure, active addresses have reportedly weakened, and XRP's breakout attempt has faded. So yes, XRP holders are having to sit through another frustrating patch. But here is the other side of the story. XRP exchange reserves have hit a 7-year low. That means the amount of XRP sitting on exchanges and ready to be sold quickly has been falling. And that matters more than people think. Whale concentration gets the headline. People see whales holding big supply and panic. But exchange reserves tell you something different. They tell you how much XRP is actually sitting there waiting to be dumped into the market. So the XRP story today is not just XRP is down. The real story is short-term weakness, but tighter sellable supply. If demand arrives from regulation, ETF speculation, institutional interest, or a broader crypto recovery, thin exchange reserves can matter. It does not guarantee a pump. Nothing does. But it does create the kind of setup where a demand shock can move price faster than people expect. And that brings us to regulation. The Clarity Act is still one of the most important stories in crypto. Senate resistance is still there, and some lawmakers are still trying to fully understand what the bill actually does. That is classic Washington. The crypto industry wants clarity. The market wants rules. Investors want certainty. But lawmakers are still trying to understand exactly what they are voting on. The important point is that the bill is not dead. It is still moving. A vote before the August recess now looks more realistic than a vote before July 4th, and there appears to be growing alignment between the industry and parts of Washington. So this is not instant bullish news, but it is structurally important. If the US gives crypto clearer rules, that helps exchanges, stablecoins, tokenized assets, XRP, Solana, Ethereum, Bitcoin products, and the wider institutional market. And while traders are panicking over the short-term chart, Wall Street is still building. Franklin Templeton has proposed new ETFs that would use corporate dividends to buy Bitcoin exposure. That is a brilliant story because it shows where traditional finance is going. Instead of only asking investors to buy Bitcoin directly, these products would take dividends from traditional equity strategies and route that income into Bitcoin exposure. That is not hype. That is infrastructure. It is another sign that institutions are still trying to connect traditional money flows to Bitcoin, even while retail is staring at red candles. Then we have GoMining challenging Jack Dorsey's Square with a Bitcoin payment system designed around Bitcoin itself. The key difference is that GoMining wants merchants to receive Bitcoin by default, instead of just accepting Bitcoin from customers and instantly converting it into fiat. That matters because it changes the use case. If merchants only accept Bitcoin as a gimmick but receive dollars behind the scenes, Bitcoin is just a payment wrapper. But if merchants receive and hold Bitcoin, then it becomes part of the business treasury conversation. That is a very different story. Before we finish, we also need to talk security. Microsoft has warned about malware spreading through infected USB drives that can target crypto wallets. This is the kind of story people ignore until it happens to them. The malware can monitor your clipboard, look for seed phrases, private keys, or wallet addresses, and even swap the address you copied with an attacker's wallet address. So if you are sending crypto, always double-check the first and last characters of the address. Do not plug random USB drives into your computer. Do not keep seed phrases on your machine. And treat wallet security like money security, because that is exactly what it is. Now before we close, it is time for the XRP giveaway winners. This week, L.A. Kings Ellen and Andre Lengel each win 10 XRP, and Homeboy and Moonhead each win 5 XRP. Well done to all 4 of you, and thank you again for supporting the show. We love rewarding the regulars, and they deserve it, but we also want this giveaway to grow. We need more people involved, more comments, more debate, more energy, and more of the community getting a chance to win. Now, to sum up today's message is simple. Bitcoin is under pressure. Altcoins are weaker. The Fed has made the rate cut story harder, and traders are preparing for more downside. But at the same time, XRP exchange reserves are tightening. The Clarity Act is still moving. Franklin Templeton is building Bitcoin products. GoMining is pushing Bitcoin payments, and the infrastructure story has not gone away. That is the difference between panic and perspective. The short-term market is ugly. The long-term build-out is still happening. And our job is to follow both. Drop your thoughts in the comments. Tell me whether you think Bitcoin holds the $60,000 area. Tell me whether XRP can defend $1.10. And get involved if you want a chance to win next week's XRP giveaway. Smash like, follow the show, check the links in the description, and we will see you at the top.